What's the biggest unknown when it comes to oil, though? I mean, I know it's very difficult to predict, and you do a decent job of it. The range is pretty wide. What would hurt that range? Is it trade, or is it, break-even prices for a lot of the shale gas in the U.S.?
I think the one observation you can make about all commodities is that while demand was weak last year, supply was equally weak. When we think about the manufacturing, call it recession that's going on right now, manufacturing output is supply. So as supply goes down, it reduces the inventories. Inventories across the commodity complex are sitting near their 5-year average, particularly oil. So when we think about the downside risk, these commodity markets are sitting on their cost support. Inventories are relatively average, and here's the key with oil: it's in backwardation, where the spot prices sit above the forward prices, and we think that's the investment opportunity.
Okay, but is the that agreement with OPEC Plus going to hold? And is that the only thing we need to ask ourselves?
Actually, when you look at what's going on right now globally, what we're seeing is a contraction in global capex for the manufacturing or old economy. Why? These companies do not earn their cost of capital. Hence the interest of not being focused on energy right now is that these are loss-making companies. In fact, I like to point out U.S. E&Ps, you take their enterprise value, divide it by gross cash invested, it implies that they destroy 52 cents on every dollar they're given. The miners destroy 32 cents on every dollar they're given. So no wonder why they're not getting capital. No wonder why the Chinese are no longer stimulating the old economy. As a result, capex goes down. And let's bring this to OPEC. If you're observing capex going down, look at the rig count in the U.S. It's dropping. What is the risk of cutting back production, riding this out, and maintaining prices? So we're confident that they're going to maintain prices.